Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, February 11th, 2021. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, you'll see we're kind of in a holding pattern here in the ES. After a pretty steady pullback at the tail end of January here, we had a very aggressive rally higher, and since then it's been kind of just quietly pushing higher and now sitting at highs over the last 4 days. We've gotten various doji-like candles that have developed up here, which are kind of like caution flags here that maybe the car is running out of gas here and may need to see a pullback here pretty soon. These days right here are very reminiscent of what happened at the end of January before we got a swoosh down. Very reminiscent of something like this perhaps, where we got that big swoosh down. So these types of momentum shifts here, where we've had a very strong momentum and then all of a sudden can't really get going higher, is usually indicative that the thing is kind of running out of steam a little bit and could see a broader pullback here pretty soon. Again, this market remains very, very strong, very bullish overall. Even if we were to see a big day down or a big 1 to 2 or 3 days down, it still likely is a buying opportunity for a continuation higher overall. Right now we may be at a cycle high. We're definitely seeing signs of slowing down up here. A 4-day narrow range right now. If you look at the 3-day right here, it's already locked in. But if we bring this up to a 4-day narrow range, you'll see again compression here at these highs with about 175 points of potential movement here should we get some sort of breakout one way or another. So again, this market remains strong overall, but we are seeing signs of caution up here that could lead to a pullback. Again, I'll point you back to the end of January, something like this, where we get some sort of flush up ahead. So continue to watch up here at these highs. A breakout from this 4-day range could trigger another 175 point move once it's ready to get going. Let's take a look at the NQ here. You'll see the NQ is fairly similar as well. This one running out of steam at these highs. A narrow 4 or 5-day range, however you want to draw it up. Yesterday's range was the highest range here. It took out 3-day lows and jumped back into the range, and we're still inside that range right now. As a matter of fact, if you go into the intraday time frames, even a 60-minute time frame or a 15-minute time frame, these highs and lows right here give us a really good key range heading into the rest of the week, and that could be used as a very good measurement for extensions once we do get a breakout. Again, this market remains strong. It remains strong until proven otherwise, but sometimes after you get up this high here and you can't get going to the upside, you may need some sort of pullback here. Maybe a retest of the FOMC key level may be ahead. Again, any pullback could still be seen as a buying opportunity until proven otherwise. Let's take a look at crude oil. You'll see here with crude oil, this one has continued to put in new highs day over day, higher lows day over day, after breaking free from the 15-day narrow range. Bullish outside bar with a buy signal on the first trading day of the month, and that led to a significant continuation to the upside. Yesterday's high put us just shy of 59s there, and we're now kind of sitting at these highs in a narrow range as well. You can see on a 3-day basis, developing 3-day basis, it's now compressed. Again, this market remains very strong. We may be at a point here where, again, we're slowing down, losing a little bit of steam here. But again, even if we were to pull back a point or two, that could provide a bounce opportunity for a continuation higher as this market continues to work towards 60 and continues to work to the top of the long-term market structure at 65. So again, we may be slowing down a hair here, and even if we were to pull back, it could be a buying opportunity for a continuation higher. Lastly, looking at gold futures here, you'll see with gold, the rejection at 1800 has led to a bounce back to 1848 early in the week, as we were looking for to begin the week, and it's stalled. It has stalled at that blue dot. It has stalled at the previous FOMC key level, 1848s, and that blue dot is the previous month's close price. So we're still kind of sitting up here. Again, another narrow-ish range at these highs. If we were to compress this down to 3 days, we can get an accurate reading on that. And here we are, compression on a 3-day basis, 50% of average range sitting up here. But this is developed after a big pop higher as well off the lows. So this could provide an opportunity to kind of gas the tank up for another continuation higher toward the 1880 level soon. If we were to get some sort of failed new low, that could be a catalyst for more strength. That means if we were to break down a bit and then reject that breakdown, that could provide a continuation higher overall. Alright, that is it for now. We'll see how this plays out heading into the rest of the day. Good luck, trade well, and I'll see you in the trading room. Take care.